All right, let's dive into what was, frankly, a monster quarter from Inter & Co. Their Q2 2025 earnings report was a real masterclass in execution. And the market's reaction pretty much tells the entire story. So let's get right to it.
And when I say the market reacted, I mean it really reacted. The stock rocketed up over 14% on the day of the release and on almost 4 times its average daily trading volume. Now that's not just retail enthusiasm. That's the kind of move that tells you the big institutions were caught by surprise and had to chase it. So what on earth fueled a rally like that?
Well, it all starts right here. A huge beat on both the top and bottom lines. They delivered 13 cents in earnings per share, smashing the consensus by over 8%. And revenue? Over $353 million, almost 5% ahead of what Wall Street was expecting. Look, these aren't just little rounding errors. This is a clear sign that their business is firing on all cylinders. But the numbers only tell you what happened. The real magic is in the why.
On the earnings call, management kept coming back to this one simple phrase, Inter by design. And this isn't just some slick marketing slogan. It's really their core belief system. The idea that every single thing they build has to perfectly plug into their ecosystem.
Now, listen to the CEO's own words here, because this is so important. For years, the whole fintech playbook was growth at any cost, right? Forget profits, just get users. Well, Inter has completely torn up that playbook. For them, growth actually drives profitability, and that profitability, in turn, fuels more growth. It's a virtuous cycle, and understanding this is absolutely critical to understanding Inter.
And here's exactly what that cycle looks like. Think of it like a giant flywheel. First, you add more clients. They're now over 40 million, by the way. As you get bigger, you gain scale and it gets cheaper to serve each customer. That boosts your profits. Then, and this is the genius part, you pour those profits right back into making the platform better, which, you guessed it, attracts even more clients. And the whole flywheel just spins faster and faster.
And hey, this isn't just a theory on a slide. Here's the proof. Take their new My Piggy Bank savings tool. In less than a month, it pulled in over 425,000 users. But think about what that really means. It's not just about deposits. Now Inter knows exactly what their customers are saving for. A new car, a down payment on a house, boom, you've got the perfect opportunity to offer them a loan. That's the ecosystem in action.
So that flywheel is spinning beautifully, but this quarter, management basically poured rocket fuel on it. Let's talk about what I believe is the single biggest catalyst for this company right now. Their massive all-in bet on private payroll loans.
In what feels like the blink of an eye, Inter has built a private payroll loan book worth almost $750 million. Now, to put that in perspective, management said on the call that this product wasn't even in their budget for 2025. They essentially created an entirely new, high-growth business out of thin air. It's just incredible.
So the big question is, why is Inter running away with this while the big traditional banks are standing still? Well, it's pretty simple. The big banks are scared of themselves. They're worried that if they offer a cheap, efficient digital payroll loan, it'll eat into the profits of their older, clunkier consumer loan businesses. Inter doesn't have that problem. They have a clean slate, and they are attacking this market aggressively. And the early results from this bet are frankly staggering. They're expecting a return on equity of over 30% from this. But here's the kicker, the risk. They priced this product assuming 15% of the loans would go bad. The reality? It's trending down towards the single digits. So they're making way more money than they planned, with way less risk than they feared. That's a home run.
Performance like this isn't just about having one great quarter. It's about accelerating their entire long-term vision. It all builds towards what they call their 60-30-30 North Star, their big plan for 2027. The first number is 60. That's 60 million clients. This is the fuel for that whole flywheel we talked about. And you know what? Being at over 40 million already, with more and more of those clients actually becoming active, 60 million is starting to look less like a target and more like an inevitability.
The next number is 30, a 30% efficiency ratio. In simple terms, that's how much it costs them to make $1. Getting down to 30% from where they are today would put them in the elite tier of the most efficient financial companies on the entire planet. The profit explosion from that would be massive.
And the final 30. This is the one that really matters to investors, a 30% return on equity. This is the ultimate report card for a business. Hitting 30% ROE elevates Inter from just another fast-growing fintech into a world-class financial powerhouse. And with products like these new payroll loans already targeting returns above 30%, they have a clear, believable path to get there.
Okay, so we've seen the incredible results, the brilliant strategy, the game-changing catalyst, and the long-term vision. Now let's put it all together and talk about what comes next.
This is it, right? The million-dollar question for every investor. After a pop like this, can the momentum actually continue? Is there more gas left in the tank? Well, the bull case is pretty clear. That flywheel's accelerating and the payroll product is just pure rocket fuel. The bear case? It's really about execution risk and macro concerns in Brazil. But honestly, the operational momentum this company has right now just feels like it's overwhelming everything else.
So based on everything we heard, here's what we're modeling for next quarter. We see loan growth coming in hot, right at the high end of their 25 to 30% guidance. We think their core profit margin continues to expand. And critically, we see their cost of risk holding steady, which tells us this growth is healthy and sustainable.
So when you put it all together, our rating is a confident outperform. The compounding power of their ecosystem, now supercharged by this massive payroll catalyst, just creates a fantastic setup for more upside. They're executing with discipline, they're showing real leverage, and that 2027 plan looks more achievable every single quarter.
And as always, just a reminder that this explainer is for informational purposes only. This is not financial advice.